In today's video, we're diving deep into Tesla and the broader market movements. But here's the twist. While most are focused on the headlines, we're uncovering the hidden patterns and signals that could make or break your portfolio. So if you've ever wondered what really drives Tesla's stock price or how to stay ahead of the market's twists and turns, you'll want to stick around. Before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started.
Let's begin with Tesla, ticker TSLA.
The company's stock has been in an interesting position lately, with a notable slowdown around the $180 mark. Since hitting this low, Tesla has been showing signs of recovery, gradually making higher lows, which suggests an upward trend. The big question now is whether Tesla can break through its 20-day exponential moving average, EMA, and push past current resistance levels to trigger a more substantial rally. From our analysis, there's a good chance this could happen, particularly when we look at the 4-hour and daily time frames. One key factor to watch is whether Tesla can overcome the immediate resistance that lies ahead at the $200 level. The 20-day EMA often acts as a significant barrier in stock movements. If Tesla manages to break through this level with strong volume, it could signal a bullish momentum, potentially testing new highs. Traders might consider buying if the stock breaks above this level with convincing volume. However, if it fails, we might witness a rejection and a potential pullback. To refine the strategy, traders should also monitor the Relative Strength Index, RSI, to gauge whether Tesla is overbought or oversold at these levels. An RSI above 70 suggests overbought conditions, while below 30 indicates oversold conditions, which could lead to reversals. But before we proceed, here's a question. What do you think is the biggest factor influencing Tesla's stock right now? Comment your thoughts below. Let's move to the broader market movements. S&P 500 ticker SPY and Nasdaq 100 ticker NQ. The S&P 500 and Nasdaq 100 are showing some interesting patterns. Recently, the market has been pushing higher, but there are signs that this might just be a temporary move. The Producer Price Index, PPI data, which was released on August 13th, followed by the Consumer Price Index, CPI, on August 14th, could have significant impacts on market direction. These data points are critical as they provide insight into inflation trends and the Federal Reserve's potential actions regarding interest rates. Looking at the market from a short-term perspective, the sentiment appears bullish, but this might be fleeting depending on the PPI and CPI data outcomes. For instance, a higher-than-expected inflation reading could trigger a sell-off as investors might fear more aggressive rate hikes from the Fed. To manage this potential volatility, one might consider option strategies like straddles around these data releases to profit from potential moves regardless of direction. Last Monday, August 12, 2024, at 11:30 a.m. Eastern Standard Time, we have the 3-month and 6-month U.S. Treasury bill auctions. These auctions are closely watched as they give investors a sense of the demand for short-term government debt, which can impact yields and in turn influence the stock market. Heading into this, the market looks poised to continue its upward trend, but we should be prepared for potential volatility as the week progresses. Earnings season is also in full swing and several key companies are set to report this week. August 12th, we have Monday.com and TeraWulf releasing their earnings, which may not be market moving on a large scale, but are worth noting. Moving into August 13 and beyond, we have more significant names like Home Depot, which reports before the market opens on August 13th, followed by Dole and Cisco on August 14th, and then big players like Alibaba, Walmart, and John Deere on Thursday. These earnings reports could provide crucial insights into consumer behavior, supply chain conditions, and overall economic health, which could sway market sentiment. For individual stocks like Nvidia, NVDA, which has been performing well, holding above $104 is critical. If the stock continues to hold this level, it could push towards $108. For those tracking Nvidia, a trailing stop loss can be an effective strategy to protect gains if the stock rises above $108. Similarly, Bitcoin has been a bit bearish lately, with potential to dip towards $58,000 before finding support. This level has been a critical resistance area in the past, and it could act as a strong support if the price dips further. Investors should watch this level closely as a bounce from here could signal a potential recovery. When it comes to the geopolitical landscape, there are currently no major negative catalysts, such as significant conflicts in the Middle East, that could derail the market. This lack of negative news allows the market to maintain its upward momentum, but investors should remain cautious as geopolitical situations can change rapidly. Another tool they use to gauge market sentiment is the Fear and Greed Index. Currently, this index is showing extreme fear, which historically has been a contrarian indicator. When fear reaches extreme levels, it often signals that the market is oversold and due for a bounce. Investors might consider scaling into positions gradually when this index shows extreme fear, allowing room for further market declines. For Tesla in particular, the volume of trades has been relatively low, around 58 million shares. Typically, low volume can precede a significant move in either direction, so this is something to watch closely. If Tesla experiences a breakout with increasing volume, it could signal stronger upward momentum. Additionally, RBC Capital recently reiterated their outlook that Tesla will outperform the market, which could further boost investor confidence. Tesla has also been making headlines with its latest offerings. The company recently launched a new bundle that includes 3 years of full self-driving, FSD capability, free supercharging, and premium connectivity for $5,000. This move is aimed at driving sales and increasing revenue by offering added value to customers. Looking at Tesla's technical indicators, the stock is currently battling with key resistance levels around $200, which is closely aligned with its 20-day exponential moving average, EMA. If Tesla can break above this level, supported by strong volume, it could easily reach $205 and potentially fill the gap above. The EMA often acts as a dynamic resistance level, so a breakout above this line could signal the beginning of a stronger upward trend. Moving to other tickers, the S&P 500 is currently approaching resistance around the $538 level. The key level to watch here is the 50-day EMA on the 4-hour chart at $535. If SPY breaks above $535, it could rise to $538 and then to $540, where it would fill a previous gap. However, if the index fails to break this resistance, it could dip to $529 or lower, making $525 the next crucial support level. Similarly, the Nasdaq 100 NQ is showing signs of bullishness, making higher highs and higher lows. The key level to watch here is $18,589. If NQ holds above this level, it could push towards $18,750. However, if it loses support at $18,424, traders could see a drop towards $18,200. The trend suggests that the market is still in an uptrend, but it's important to monitor these key levels closely. For the QQQ, which tracks the Nasdaq 100, if QQQ breaks above $454, it could push towards $457.50, filling the gap from previous sessions. However, if it fails to break resistance, there could be a pullback to $444, where the next key support lies. Finally, the VIX, a measure of market volatility, is looking bearish, suggesting that the market might push higher temporarily. However, a spike in the VIX could signal a market pullback, so it's essential to keep an eye on this index as well. The table reveals a pivotal moment for Tesla, the S&P 500, and the Nasdaq 100, with each index and stock hovering near significant resistance levels. Tesla is flirting with the $200 mark, a key barrier that, if broken, could see the stock push towards $205 and beyond. Similarly, the S&P 500 is testing resistance around $535, with potential to move higher towards $538 or even $540 if the momentum holds. The Nasdaq 100 is also in a similar position, facing resistance at $18,589, with an upside target of $18,750 in sight. However, these bullish scenarios hinge on whether these levels can be sustained. If Tesla slips below $198, or if the S&P 500 and Nasdaq 100 fail to maintain their support levels at $529 and $18,424, respectively, we could see a downward correction. This makes it crucial for investors to keep a close watch on these key levels, as they could significantly influence the market's direction in the near term. It's a moment of high stakes, where both opportunities and risks are on the table.
In conclusion, the market is showing short-term bullishness, but there are several factors at play that could shift sentiment quickly. Tesla, in particular, looks poised for a potential push higher if it can break through key resistance levels. However, investors should remain cautious and stay informed, as economic data, earnings reports, and geopolitical developments can all impact market direction. But before we wrap up, here's a question for you. What do you think will be the next big trend in the stock market? Comment your thoughts below. Thank you for watching Simple Investing Secrets. Remember, this video is for informational purposes only and should not be taken as financial advice. If you enjoyed this video, please like and subscribe to our channel for more content on stocks, the stock market, and strategies to help you achieve financial freedom. We'll see you in the next video.